watching Daily Market Review with me, Slava Ismailova. We are going to start our review with our forex majors, and the first currency pair will be Euro versus the US dollar. The 1.3277, 1.3297 resistance area remains the focus, following Monday's inside day. Single print resistance at 1.3277 from April's market profile is now within striking distance, and the bear resistance line of a 2-month Euro bull wedge symmetrical triangle lies at 1.328 to strengthen the resistance cluster. However, two wave equality targets have been generated at 1.3316 and 1.3338, and sustained euro strength above 1.3297 would open the 1.3338 objective. Only a setback below Monday's low at 1.3207 would question the euro bullish outlook, exposing last Friday's intra-wave high low at 1.3157. Weekly chart Euro US dollar trend is bullish. The next currency pair for today will be US dollar versus the Japanese yen. The medium-term bear wave is pushing below the daily Ishimoku cloud base at 80.1, and more weakness below Tuesday's current session low at 79.67 is the main threat. Friday's push below 80.29 upgraded the decline from the March 15th reaction high at 84.18, and further weakness towards 79.34 and 78.95 has been signaled. The 80.4 resistance level has become pivotal for the short term, and only move above there would lift the tone. A weekly chart US dollar Japanese yen trend is bearish. The next currency pair for today is Great Britain pound versus the US dollar. Corrective weakness towards 1.6208 and 1.6144 is underway, and setting a fresh 8-month high at 1.6302 on Monday. However, the powerful medium-term Great Britain pound uptrend is likely to limit consolidation in order to defend the 1.6 level. Renewed Great Britain pound bull pressure on 1.6302 would threaten an uptrend extension towards the 1-year bear resistance line at 1.6321 and the important 260-week falling move average at 1.648. Weekly chart Great Britain pound versus the US dollar trend is bullish. The next currency pair will be US dollar versus the Swiss franc. The support line of a bear pennant continuation pattern remains under threat near last Friday's low at 0.9051. Friday's bearish outside day suggested downside break through 0.9051 is in the cards, bringing the April 2nd reaction low at 0.9002 back into the focus. Only a recovery above Monday's high at 0.9097 would provide respite, opening last Friday's high at 0.9134. Weekly chart US dollar Swiss franc trend is range. And the last currency pair for today is Australian dollar versus the US dollar. Tuesday's Asian session weakness brings the short-term Australian dollar bear wave flag support line at 1.0259 back into the immediate picture. The important April 11th reaction low at 1.0226 is also vulnerable, as a break below 1.0226 would create additional downside risk to 1.0045 and parity this week. Regaining ground above 1.0435 is required to suggest a return to Friday's peak at 1.0476 is in the cards. Weekly chart Australian dollar versus the US dollar trend is range. You have watched Daily Market Review with me, Slava Ismailova. See further details on our site grandcapital.net. I'm wishing you good trade and see you later.